Excuse me, I'm Max Keiser. This is the Keiser Report, and we're going to get into some really important things here in Paris, France, where we are now. So let's bring Stacy on.
I'm going to quickly read the three headlines I have here because it's all about politics, geopolitics, and geoeconomics here. The first one, because we're in France, I'll start with the French headline because this was from Macron. And after Trump leaves France, Macron warns world is living the end of Western hegemony. We also have a headline from the US that matches this to my mind, and it's from Bill Dudley, former head of the New York Fed. Started in 2009 after Tim Geithner left until 2016. And before that, he was with Goldman Sachs for about 25 years. The Fed shouldn't enable Donald Trump. You know, Trump is in a trade war, and that's why Bill Dudley responded to this. Is like, this trade war with China is crazy. We shouldn't cut rates. In fact, we should raise rates, if anything. He's almost suggesting it's anything to get rid of Trump, like we should overthrow the guy. Well, Trump's new trade war tool might just be antique China debt. Collectors of pre-communist debt are lobbying the White House to force Beijing to pay up. President Donald Trump's next move in an increasingly fraught trade war with China could be one for the history books, literally. The Trump administration has been studying the unlikely prospect of a reviving centuries-old claims on Chinese bonds sold before the founding of the Communist People's Republic. This was in 1911, and it was used to fund the construction of a rail line between Hankou and Sichuan. And once the Communist Revolution happened and the people overthrew the imperial power in China, they said, forget those debts. But now the US might revive those debts because people have been buying them on like eBay as a collector's item.
To address Macron's comments and Bill Dudley's comments, right, this plays into the dual theme we've been talking about for a few months now: de-globalization, de-dollarization. Right, so the loss of Western hegemony, that's de-globalization. This came in with Trump in 2016, that the idea of monetarization, the global central banks cooperating to put out a fiat currency unit of account that was better than gold, is a 60, 70-year experiment that is now collapsing, which is leading to de-dollarization as countries like Russia move aggressively away from the dollar and buy gold, and de-globalization simultaneously. As far as these Chinese debts that were issued in 1911 or 1911 and are now being sought after for full repayment, I would imagine what would happen is that simply U.S. will default on some bonds to China, this is approximately $1 trillion worth, and claim that, well, we're just making good on the debts that you owe us. They will use to justify a default, again, de-dollarization.
Well, yes, there are some weird people involved in this, some crazy Texan sort of pastors and stuff like that. And they are encouraging that they're claiming that with inflation and exchange rates and the history, that it's actually worth $1 trillion, which, by the way, happens to be how much debt that China owns of the US. So they own $1 trillion worth of treasuries, and like, let's just cancel it out. But you mentioned deglobalization. And for thousands of years, we've gone through globalization and then deglobalization, globalization, deglobalization. We've gone through these constant cycles. Humans constantly do this. We do this in markets. That's why technical analysis and sort of that sort of thing. Also, when you look at the history of globalization or empires rising and falling, this happens. We go through enlightenment and de-enlightenment. So I think this is what you're seeing with what Macron is responding to when he says it's the end of Western hegemony. What he's saying is that, like the Sun Kings before him, before the US empire, we might not call them emperors or Caesars or kings, but they do act like it with caprice. They become very capricious and random. And okay, we've worked on this, huge nuclear deal with Iran. Oh, now it's gone. Forget it. You can't deal with them. Like randomly assigning enemy status to countries and saying, no, you have to end all your trade deals with them and destroy your own economy because you're going to use the dollar and we're going to shut it down. So this is part of what he's responding to. Deglobalization is also the de-enlightenment.
Cycles are natural. They happen, historical cycles throughout 100-year cycles, 1,000-year cycles. The concept of having a central bank like the Federal Reserve Bank is an attempt to neutralize these cycles and say, look, we recognize there's a thing called the business cycle. And when things get hot, we're going to raise interest rates. And when things get slow, there's a recession, we're going to lower interest rates to mitigate the amplitude of the cycles, to have a steadily growing economy with price stability. That's the mandate of the central bank. But what's happened under Greenspan, when the markets crashed in '87, was they went and they created the plunge protection team, or the working group on finance, to keep a perpetual rolling bull market and to get rid of the business cycle, to favor a perpetual nirvana for Wall Street. And this has gotten now, as post-Greenspan, Bernanke, Yellen, here we have Jay Powell, is now taking it upon themselves not only to get rid of the business cycle, but to actually challenge the president by saying, we're going to adjust our interest rate policies to try to take you out of office. So not only have they abandoned their mandate of price stability and counter business cycle policies, but they have decided that they are a fifth branch of government. Right? So that's not in the Constitution. That's way, way off the Constitution. That is tyrannical.
First of all, since 1987, we've had the divine right of banks. They've established this, and it's now solidified that they are divine. They have the right to exist beyond all others. They don't have to abide by the laws that common man has to abide by about going bankrupt and things like that. This doesn't happen to the sun kings of Wall Street.
To be clear, I know that there are three branches of government, but I often include the press as the unstated fourth.
The fourth
That's
branch.
That's why I refer to them as trying to be the fifth. Okay, you frickin' commenters, you can go away.
Okay, since we're talking about the Fed, I'll say this: U.S. President Donald Trump's trade war with China keeps undermining the confidence of businesses and consumers, worsening the economic outlook. This manufactured disaster in the making presents the Federal Reserve with a dilemma: should it mitigate the damage by providing offsetting stimulus, or refuse to play along? If the ultimate goal is a healthy economy, the Fed should seriously consider the latter approach. And he actually goes on to say, there's even an argument that the election itself falls within the Fed's purview. But, before you comment on that, I want to say, because I'd like to compare it for what is going on in France and where we are. We're home here in Paris in France. And, when the divine right of kings ended here, and it was a very brutal ending to the divine right of kings, we'll say, when this sort of situation, when France was on the verge of bankruptcy, thanks very much France, because they went bankrupt because there was a gold standard then, and they used their gold to finance the American Revolution. But that was good for us. But they went bankrupt. And what did John Law suggest they do? Open the books. He showed the books of the divine king to the people. They published it, and all the people of France read it. And suddenly, the king is like an ordinary person. He bought some toilet tissue. He went to, to Safeway or Tesco, and, there was an ordinary thing, but also like the extravagance of his life. And the court's life was suddenly so shocking to the people. So here's the Fed basically opening up their books of we're independent and we're like the clergy. We're just, funneling the messages from the economic gods. But now they're saying, no, we're going to rig this system. We're going to overthrow the government. We're going to install our own puppet banker.
Right. The Fed would like us to believe that there's policy and economics behind what they do.
Yes.
And they have dots, and they
Yes.
follow the dots.
Yes.
And they get together in these confabs like Jackson Hole, and they discuss economics, when in fact they're politically motivated hatchet guys who are there to protect the bankers and make sure that their friends do not obey the rule of law. And I'm not sure it's about the king being shown his true accounting so much as opening the kimono.
Yes.
They are revealing that inside this kabuki theater of central banking is a very unpleasant-looking, ungangly beefalo.
So you know how each nation has a unique cultural sensitivity to things that have traumatized them in the past. So Germans are very sensitive to inflation because they know where it took them as a people. Russia is very sensitive to invasions. They've been invaded by Napoleon, by the Nazis. They don't like it. In France, they're very sensitive to the people rising up and bringing out the guillotine. So finally, ending on Macron, he says, the world order is being shaken like never before. It's being shaken because of errors made by the West in certain crises, but also by the choices made by the United States in the past few years and not just by the current administration. And he then went on to say pushing Russia away from Europe is a profound strategic mistake, essentially suggesting we're doing this because of US politics and not about pushing them into the arms of China, which is going to be a disaster for Europe.
Well, I've lived in Paris many years. There's more statues here of Thomas Jefferson than Maximilien Robespierre. You don't find any for Maximilien Robespierre.
No.
Maybe one in the 19th or something. And yet he is the architect of the revolution, the reign of terror.
Some could say he went a little bit too far.
He did what had to be done. He equated, read his work. And now, will the Gilets jaunes pick up the mantle of Maximilien Robespierre? That's my question.
That's what Macron is worried about, and that's what he's seeing, and this is what he's having to plan his own survival. So this is what he's saying.
I mean, get out the, either leave the country or face the consequences. I mean, that everyone here is on the cusp of this type of revolution. God bless them. I support them. Won't be here, of course.
You'll be Robespierre, the modern day.
Long gone, but I support. Oh, we got to go. Take a break, and when we come back, it'll be like a drop of a guillotine on this, and then we come back, and it'll roll into the second half. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversation with Mark Valek, who publishes the annual Gold We Trust Report. Look at this. I pointed this out last time. It's, at the very least, you could hold the door open with it, but you should read it. It's chock full of goodies. It's available for free as a PDF. Just contact these folks at Increment. Welcome back.
Hi, Max.
Nice to see you again. Let's get into part 2 here. I wanted to touch briefly on this internecine rivalry between the gold bugs and the Crips, the bugs versus the Crips. And, you have folks that are hardcore gold bugs and they don't like the Bitcoin crowd, some Bitcoin crowd throwing, rocks or whatever at the gold bugs. You are straddling both worlds. What are they getting wrong?
Well, I try not to be dogmatic in any sense in this debate, at least. So I think Bitcoin is obviously a great invention. It has done a lot for mankind already, in my view, at least. If not, at least, if not, it will become perhaps in like one part of the extreme scenarios a new global reserve currencies. But if that shouldn't materialize and it goes to zero because there's something better comes up or we go back to a gold standard or whatever, it at least has brought up a huge conversation to the young people what fiat money is, what money is. And I think ideas actually form future, so it's important that people really think about their ideas. So that I credit Bitcoin a lot.
Well, let me play devil's advocate for a second. Or in this case, let me play Peter Schiff, the advocate. So Peter Schiff, who's a prominent anti-Bitcoin and gold bug person, will say, well, look, Bitcoin is just another fiat money. He doesn't see it as hard money, as commodity money at all. So, and you are positioning Bitcoin in institutional accounts. I mean, they're buying lots and lots of it, and the institutional money is pouring into Bitcoin. This is it's not a hobby for cypherpunks anymore. This is becoming a factor in global finance. It's changing the global financial architecture. So, what do you say?
Well, I think in both cases, like an alternative store of value is kind of the final insurance policy for central banking system, which is going crazy. So if you have negative rates and negative yielding bonds, more and more, 17 trillion and increasing by the day, then you need some place to hide. And then people really, I think about what is money, what could serve as money. And as in terms of stock to flow ratio, both assets really are very hard money. People realize, okay, this could serve as part of store of value. And I wouldn't be, from a portfolio management view, want to be dogmatic. I would be pragmatic, and I think one can play this very well in a combined portfolio. One doesn't have to bet the house on either of these assets, so it's actually quite an easy thing to play, and I think these debates...
But it goes back to Austrian School of Economics, doesn't it? I mean, it's Karl Menger's idea of money. What is money? If it's all subjective anyway, and if the market says Bitcoin is money, and it has the attributes of gold, and that's just a limited supply. People use it as money, and it's fungible, it's tangible, it's divisible, it has every quality you would of gold, then it is money. It's just, if he claimed, I don't understand how Austrian school economists can not see this as money.
Yeah, I agree. So Menger did say exactly what you just now told the viewers. So I think sometimes Mises' regression theorem is taken as like a counter argument, because Mises kind of stated that you need a commodity first, something that has what is often called, in my view, falsely called intrinsic value. You need some good which has a value first, that then it can perhaps become money. But I think the Mengerian argument actually trumps that.
I think so too, darn it. I would like to go on record. The Mises argument, I think, is short-sighted, and clearly he didn't see two things. There was no such thing as negative interest rates during Mises' time.
Right.
And there was nothing called Bitcoin in cryptocurrencies. So he's been trumped by Bitcoin. Now, let's move on. So Russia's central bank has been buying gold quite aggressively, month after month, year after year. What do you think's going on there?
Well, that's very interesting. I mean, this development has been going on for 10 years now, and they've doing this very on a consequent basis. And they are actually going to overtake Italy and France as number 3 and 4 of international gold holders within the next months.
And they have very little debt.
And they have very little
almost no debt.
Debt to GDP, right? So that's quite an interesting development. I think that will be big news when Russia becomes the third largest gold holders, probably at the end of the year or beginning of next year sometime. Then you have really US, Germany and Russia. China is not that transparent, obviously, with their holdings. There could be a little bit ahead already.
So this is a big story with de-globalization and de-dollarization. So people Russia are saying, look, we don't want to be in the dollar anymore because we're tired of the censoring. We want to do business, and there's a school of thought that tells you that Putin's main objective since taking the presidency in Russia is to do deals. He's pro-business. He wants to do deals around the world. That's his primary objective because he realized that's how to grow GDP, and that everything he does reflects that. And if he's censored by these spurious sanctions based on extraordinarily thin political gruel, he's like, okay, forget it. We'll just dump the dollar. We'll use gold. We'll accumulate gold. We'll seek other ways to do business. We just want to do business. You would think America being pro-business, there would be a natural alliance. But America seems to be kind of reverting into a shell of no business. But, I know when people on the first episode that we did, of course, there are going to be comments in there that says, this guy sounds like Arnold Schwarzenegger. Now, you must get that a lot. Is that correct?
Yeah, I saw some comments. Somebody even said I'm Arnold Schwarzenegger of Austrian economics, so I'm okay with that. But Arnie did achieve quite a few things, so you have to give him that.
That's not a bad thing, is it?
Maybe, yeah.
All right, so not only did Mark Carney call for a post-dollar world, right? So Mark Carney, central bank, said get out of the dollar. Okay, this is after Russia's been accumulating gold and positioning themselves for a post-dollar world, a de-dollarized world. Now, Mark Carney of the Bank of England is saying we need to get out of the dollar as a world reserve currency, and he's looking at crypto. So this must give your clients and the folks you talk to a bit of a fillip there, because now you've got the global central banks. And what do you make of this idea that in America, the Federal Reserve Chairman, Jerome Powell, no, you know what, it was Bill Dudley, the former New York Fed. He wrote an op-ed. He says, we got to stop Trump from winning. we can't lower rates. So this is beyond activist Fed. This has gone cuckoo.
My personal view is that the independence of the central banks really hasn't existed for at least a few decades. For instance, going back to George Herbert Walker Bush, him blaming Alan Greenspan for not being re-elected because he didn't lower rates in '91 and so on. So Nixon, even going back to Nixon, this was always like a little bit of a game, which now is very obviously going on. I mean, one can just follow it on Twitter easily. So the president always wants lower rates, generally speaking, and sometimes the Fed resists and sometimes it doesn't. So in my view, I think still this whole discussion is overblown, because I think at the end of the day, the market is pushing the Fed. So if the yield curve inverts, which it has, this is a much higher pressure than any president pushing for lower yields, because really the main target of the Fed, of all the central banks, is to keep the party going on. And you really can't keep it going on if you have an inverted yield curve. It's really flashlights going on. So I think this is politics and a lot of power structure going back and forth, but at the end of the day, the market has to say.
Well, right. Well, on that point, I must interject my thought here. So to some degree, the central banks are a bit of a Politburo. You know, they're setting the price of the money. And their thought was that if we lower the price of money, we'll create some inflation, and that'll create some tax revenue, and we'll all pay off our debts. Instead, they created deflation, and they are sinking the global economy, as now pundits are recognizing that negative interest rates and low interest rates are causing deflation, not fighting deflation. So it's not necessarily a market signal that they're getting. It's more of a panic signal. Or let's say the Minsky, Hyman Minsky and his theory that markets start to feed on each other. And you use the inflated asset value to borrow money to inflate the asset again until you have that Minsky moment of a crash. Whether it was 1987, the bond market in 93, dot-com in 2001, subprime mortgage in 2008. And I think we're at a Minsky moment right now. Do you agree with that? And if so, where will it pop up? Where will we see it?
We and others have been talking about the everything bubble. And the everything bubble is perhaps the last stage of a series of bubbles, which you now, a few of them you mentioned just now. And the everything bubble is probably in its center, there is the bond bubble. And if you have 17 trillion bonds, with negative yield, what if not that is a clear indication of a bubble?
Right. So I mean, Austria-Hungary Empire, going back a few hundred years, the interest rates have not been this low. The bonds are at a higher price than they've ever been in 300 years. So Liechtenstein's been around for what, 300 years?
Right.
You've never had a bond bubble this big in your entire history as a country. What do you think about that?
Well, the good thing about Liechtenstein, it doesn't have debt. So
yeah, right. How many people live there?
38,000.
What's the average per capita net worth? High. Higher than Qatar?
I guess so.
Wow. We're moving.
Similar.
Can I get dinner? Can you buy me dinner?
Yes, you might.
Okay, let's go there.
Come on.
Everyone there is freaking stinking rich, isn't it? Anyway, look, this book here has a lot of charts. It has so many charts that Mitch Firestein called me in the middle of the night and said, rush me a copy immediately because I'm dreaming about all the charts in this book. To get back to kind of a global talk about rates and economics and things, just cover briefly, you mentioned stock to flow ratio, and this kind of crosses between Bitcoin and gold. What is it? How is it important? And how is it important to Bitcoin in particular?
Yeah, that's a good point, and that's perhaps one of the very central points of why we view gold differently than, for instance, mainstream banks. Mainstream banks, if they write an analysis about gold, they usually have it in their commodity analysis department, and this is just like supply and demand. They analyze supply and demand, but the big difference is obviously that gold's supply is huge. The above ground supply is huge. That's basically the stock you're referring to. Whereas like oil or any other commodity, you really just produce to consume, right? So you hoard gold, and the really good thing about gold is when you hoard it, it keeps its
Right,
purchasing
the mining
power.
output per year is the flow.
Right.
So you've got above ground stock, your annual flow. In Bitcoin, because the halving coming up in 2020,
Right.
the mining output is, which is the flow, versus the hoarding stock that people have, the hodlers, that goes through a significant event, correct?
Right, it halves every 4 years, and basically it's the inverse of inflation. I think that's perhaps an easier way
It's Austrian.
to realize it. It's like 1.5% about with gold, and
It's an Austrian economist's dream. It's a dream currency, not to mention Hayek.
it's steady inflation. and-
Everybody loves it. Even in Liechtenstein, they love Bitcoin now. That's why we're moving there. I'm getting a chalet, a chateau. Can I pay for it in Bitcoin?
You can.
Well, I like this guy. Well, we have to say goodbye. But thanks for being on the Keiser Report.
Thanks for having me.
All right, that's going to do it for this edition of the Keiser Report. With me, Max Keiser, Stacy Herbert, Mark Valek's been our guest. Incrementum, get this book. You get it for free. And you catch us on Twitter at Keiser Report or KeiserReport.com. And we'll have a link to this book. What do you think about that? Until next time, bye, y'all.